Welcome. My name is Fred Baerenz, President and Chief Executive Officer of AOG Wealth Management. So the S&P 500 just crossed over into bull market territory. We officially went above the 20% gain mark since the last bottom in 2022. The question is this a broad-based rally? Is it led by just particular stocks? And does it have legs to continue into the future? So to do a deep dive, we have information from Dave McGarrell and First Trust Advisors using S&P Capital Q. We're going to look at the 5 stocks that have led this rally and contributed greatly to its success. And we want to look at PE ratios. So you've probably heard the term thrown around, may not be a household phrase used every day. So PE ratios refer to price to earnings ratio. So if one divides the price of the stock by the earnings ratio, the answer to that would be the PE ratio, and typically means how many years do you have to hold the stock until you get your money back. So it's not uncommon for growth-oriented stocks, of which all 5 of these are growth stocks, to have a higher PE ratio relative to the overall S&P. So in looking at these 5 stocks, Apple, Microsoft, Amazon, Google, and Tesla, you can see the blue bars represent how high has it come up since the bear market, and the orange bars show how far did it drop from the previous high. So you can see these 5 stocks have still not recovered the value that they dropped in the bear market of last year, but they've made quite a bit of headway. Now let's turn and look at the number crunching on these 5 stocks. So a second way to break down these 5 stocks is to look at their forward PE ratio, meaning not what the earnings are in this particular moment, but what are they expected to be over the following 12 months. So in looking at forward PE ratios from 2021, 2022, and through May 31st of 2023, one can see that the forward PE ratios were relatively high 2 years ago. As these stocks dropped in value, the revenue for the most part was maintained, and so those PE ratios came down as expected. Now with the big bull market run that we're currently in, they still have not returned to the previous price to earnings ratio. Now, if we had included NVIDIA, which is the absolute star this year, you would see price to earnings ratios like 150 times forward earnings, which is just insane in terms of looking at a stock from a value standpoint. But because NVIDIA is seen as one of the leaders in artificial intelligence, they make a lot of chips that we use now, people are willing to pay, or if you will, overpay for that particular stock. So why don't you just bring you this quick minute, again, courtesy of Dave McGarrell and First Trust Advisors, looking at the 5 main leaders of this S&P rally over the last 12 months. What the components are relative to forward price to earnings ratios. And in terms of looking on a go-forward basis, they're not quite as expensive as they were 2 years ago, but they're getting very close to that, and that would be a time when a lot of institutional managers might look to take some money off the table, cash in some of their gains, and then redeploy. So here's just a quick look at the leaders of the S&P and the bull market rally. I'm Fred Baerenz, AOG Wealth Management.